It's no secret that everybody loves SCHG. The ETF is up over 40% in the last year and has had insane performance and outtracked the S&P 500. But a giant reason that me and so many other investors love ETFs like SCHG is the exposure to some individual stocks that we may not want to buy because of one reason or another. Today I'm going to be talking about some of my favorite secret holdings in SCHG that you may not know are in SCHG. For full transparency, SCHG is about 12% of my portfolio right now, and I want to make it around 25%. And for every like this video gets, I will put $1 into SCHG in the next week. Thank you to my channel members Redwood and Major Speed for the support. On to the video.
Here comes Santa Claus, here comes Santa Claus, right down Santa Claus.
Please, it's too much winning.
Reindeers pulling on.
Hello, I like money.
Coming in at the 32nd largest holding in SCHG, one of the favorite holdings right now in SCHG I have is Uber, stock ticker UBER. Uber is a company that's been on my watch list for a bit now. It is on a dip about 20% from its all-time high a few months ago. Right now, Uber has a lot of negative sentiment around it. A lot of people are assuming that Waymo and Tesla are going to be having these driverless cars in the next 5 years, and this has been the talk for the last 10 years if you look historically. Uber is still a company I'm researching, and we're actually going to be having Aria on this Saturday on the Cash Flow Kings to research it more and just to go into the deep conversation about it, so make sure you're there. They're trading at a piss poor valuation when it comes to price to free cash flow and other multiples, and a lot of people are saying that the stock has 2x potential from here. Now, right now in a market where I don't think that there are a lot of opportunities, especially in my portfolio, at a really cheap price, Uber definitely stands out. They're also poised for a massive free cash flow explosion in the next few years. I also heavily believe in the brand and the moat that Uber currently has over the rideshare market. I think they're the top dog by far. Right now, Uber is not one of the core holdings of SCHG, but it's definitely still a company I'd love to get exposure to. Uber has seen record profitability growth up 20% year over year in constant currency and GAAP operating profits exceeding $1 billion. Increased engagement with their customers, membership and advertisement growth about 70% year over year. That's absolutely insane, with about 25 million members, expansion focus, insurance costs, autonomous vehicle partnerships with other companies, strong advertising business. They've seen some really quality revenue and EPS growth over the last few quarters as well, and I do believe that this whole robo-taxi thing is completely blown out of proportion. I think that's blood in the water for me as an investor, and I'm absolutely doing more research on this company as we speak. Once again, though, Cash Flow King, Saturday, 8 p.m. Eastern, the Uber intervention will be happening. All right, next, coming in at 1.5% of SCHG's portfolio weighting, it is none other than the streaming giant and top dog Netflix. Now, Netflix is a company that I personally love, but as an investor, I'm not touching right now. I'm not paying 52 times earnings for this company right now, unfortunately, but if it dipped down again, I would absolutely love to buy. I think Netflix has really developed a quality moat and brand reputation that I love personally as an investor. Now, I was hoping the stock would absolutely tank to zero after the Jake Paul and Mike Tyson fight. As a consumer, I was really pissed off after that, but they did incredible numbers, and I'm very, very excited, especially as a TKO shareholder, of what's going to happen with Monday Night Raw on Netflix coming up on January 6th. That's going to be very entertaining. Also, there's going to be some live football on Christmas Day. That's going to be very interesting as well, and it all does really good numbers for Netflix's business. If Netflix can actually prepare ahead of time for the 60 million viewers across America that are watching, I think it's going to be a massive success for them. Not to mention their in-house library and development of content that they have is flawless. Stranger Things is an amazing show, one of my favorites. They have a great library, just constant entertainment. Netflix is somebody who owns Disney stock, I think has the better library, even though Disney's has improved a lot recently. Netflix is an awesome company, but I just can't justify paying that valuation for it, which is why I love owning SCHG. I don't have to pay a 52 times earnings for SCHG. Netflix is also one of the only companies right now streaming besides Disney that has produced free cash flow, and it was the first streaming company to do that. But Netflix is just one of those companies I can't find myself to invest in and pay that kind of a premium for the business, but I love having exposure to it. Alright, next, a company that you guys have absolutely heard of in the last few weeks in the news, that's United Healthcare, of course, which is the 12th largest holding in SCHG. Now, United Healthcare is an absolute giant of a business, but the reason that I don't own it simply is because I don't understand the business enough to feel comfortable putting a lot of money into it. But the free cash flow does not lie. The fundamentals of the business do not lie. It has a moat for sure. It's incredibly powerful. This is a company that's going to be around for the next 50, 60, 70 years, 100%. unless a Batman Joker moment happens. Or maybe the Riddler more so. But it's interesting to see how many people are awake now to how crazy powerful these businesses are. But it's such a large and such a complex business, I just don't feel comfortable putting my own money into it just for the reason of circle of competency. I'm happy enough getting exposure through SHG. If you look at their free cash flow growth, they currently have a 3-year CAGR of 9.17%, a 5-year CAGR of 14.32%, and a 10-year CAGR just under 17%. That's incredible growth. Once again, the fundamentals are probably one of the strongest in the entire world when it comes to this company. I think the valuation is actually pretty reasonable, but I just don't understand the business, so I'm not going to put my money into it. Simple as that. It's going to be really interesting over the next year, though, to see how many political protests against United Healthcare and other insurance companies kind of come along, if that's going to impact the stock price. If it got like absurdly cheap enough, I'd probably buy it and force myself to do the research and drill it into my brain to understand the company. But when you hear individuals talking about a triple compounder with cheese, United Healthcare is one of those companies. I hope you're not hungry because the 43rd largest holding in SCHG is none other than Chipotle, stock ticker CMG. Now, Chipotle has a ton of room for growth, but at this valuation, I just can't find myself to buy it. I definitely understand the business. I'd love to buy some, but it has to be at a reasonable price. Probably if it, fell in half pretty much from here, I would probably buy back in. But I just can't find myself paying 60 times earnings for a restaurant company. I just can't find myself doing that. There's other restaurants that I find a lot more interesting at better valuations, i.e. Texas Roadhouse, Starbucks, Mickey D's even. But still, I think as a business, I just love Chipotle. I love going there as a customer as well. It's one that I love having exposure to, but I don't want to necessarily pay 60 times earnings for it. But Chipotle is absolutely a business that I love. And as another bonus, the 29th largest holding in SCHG is BlackRock. Now, BlackRock just controls the world, so they're never going to go out of business. BlackRock, though, one of those infamous companies I think that's widely known that it just simply controls the entire world. It's always going to trade at a premium valuation, and I've just never got myself to do like the full due diligence and research on it. But it's absolutely a company that I'd feel secure holding for a long time, and I like having exposure to it through SHG. At the end of the day, though, SCHG is a beautiful ETF, but with crazy performance recently, I've been a little more conservative with my buying, but I've continued to average in because as a long-term investor, I'd be a phony investor to try and time the market's highs and lows. But it absolutely, though, on a decline or sizable dip with SHG, I will be buying more. I want to thank you all for watching. If you haven't already, subscribe to my live show, Cash Flow Kings, every Saturday, 8 p.m. Eastern. We are live there. Link in the description for that. Let me know in the comment section how much SHG you currently own and how much you're trying to get to by the end of 2025. Thank you for watching. Smash the like button, subscribe, do dividend stocks, not drugs, and have a good one.